It's Nikki, and we are back for the latest episode of this unbelievable life. And I am here again with Stacy Sorenson from Ruoff, and she is going to be talking credit again. And I am so excited. Today's episode is going to be talking about credit repair. Stacy, take it away.
Nikki, thank you so much. In the first episode, we just talked a little bit about what credit is, some of the different types of credit. So, we're going to kind of delve in a little bit more about what happens when we've got some issues with your credit, when life happens. Again, your credit score is that tool that financial institutions are going to use to really see what your financial stability is and what it's been like for your repayment on loans. Again, your credit score is also referred to as your FICO score. And we look at three of the major reporting bureaus, which again are going to be your TransUnion, Experian, and Equifax. All right, so the five components of your credit score, again, we're looking at payment history. That's going to carry the most weight. So with your payment history, your past credit behavior is evaluated as an example of your long-term behavior will continue. The next factor, again, is that credit utilization, which weighs at 30%. And this is really showing that you're keeping your credit usage below your monthly limit. And this shows that companies that you're responsible with your credit. And again, that magic number that we're looking for is to keep that limit at 30%. So again, if you've got that $1,000 limit on a credit card, you want to keep your balance at $300 or less. Okay, that next section is going to be your credit history. Again, this is just really how long you've had your credit open. So we want to see, again, your patterns, how you've used credit. So the length of how long you've had your credit history started is going to weigh in at 15%. The next we're looking at are the types of credit. So again, we want to see a mixture of different credits, your credit cards, a secure loan. And what that is, it shows that you can handle different types of credit or different types of debt. Finally, we're looking at credit inquiries, which is going to show 10% of the weight on this. And this is just an inquiry showing us how many times you have applied for new credit. And really the red flags that we look for if you've applied for a lot of different types of credit in a short period of time. So that's something that we're really going to look at. So let's talk about, if life shows up, things happen. Maybe you've had an illness, maybe you've had a job loss, something has happened and you're having some issues with your credit. Let's kind of talk about what you can do. Okay. So again, we said the main factor that we look at and the main factor on your credit score are making those payments on time. If something comes up and hey, I'm not going to be able to pay this bill within that 30-day period, call your creditors, let them know whatever your situation looks like. You want to be proactive. The worst thing you can do is just bury your head in the sand and ignore, all of those things. You do want to reach out to them, let them know what's going on, and they should be able to work with you and come up with a plan so you don't get so far behind on that it's hard to dig out. And even one late payment, when we look at the impact, one 30-day late payment can drop your score by almost 100 points. So when we say it's really important to keep those payments on time, it does. It has a huge impact on your credit score. I want to talk also a little bit about medical collections. They have made some changes here recently on how those medical collections are going to show on your credit bureau. So basically what a medical collection is, you get a bill from your doctor. If you had a procedure at the hospital, whatever that looks like, if you do not pay that debt, they can legally report it to the credit reporting agencies and it can show up as a collection and negatively affect your score. So with these updates and the way this has changed, if your credit report shows a medical collection and it's a zero balance, this collection will be removed and it may not have any impact on your score. So that is something that's new. If the credit report shows a medical collection and there's a balance, and the date on the collection is less than 12 months, the collection will be removed. So again, that's something different on the reporting. Now, if the date on the collection is 12 months old and has a balance, again, that will still show up on your credit report and have a negative impact. So just like we talked earlier about talking to your creditors if you're having some issues making your payments, if those medical bills start coming in and you're not able to pay them all in full, what you need to do is contact the doctor, the hospital, whomever it may be, and have that conversation with them. Let them know where you're at. There's a couple things that they'll do. They'll work with you. They may come up with a payment plan. They may say, hey, can you pay $50 a month towards this, or whatever that looks like. So they will work with you. Another thing I've seen the hospitals do, they can actually send you paperwork if this is a hardship. You can fill out these forms, show your income, show your debts. And again, this is another way to let them know what's going on and give a better picture on how to work with you. So again, it's so important that if you're having financial problems, reach out and have those discussions. It'll put you in a much better situation. Another thing I want to talk about is student loans. So with that, I really want to talk about how they affect your ability to get a mortgage. So in the mortgage process for any government loan, which would be an FHA, a USDA, or a VA loan, we pull something called CAVERS. And what that is, it's Credit Alert Verification Reporting System. Okay. So what that is, we all have a CAVERS number. When you go to apply for that government loan, the lender is going to pull this CAVERS report. And what they're going to do, they're looking to see if any of these government loans are in default or delinquent. So with that, if you have what's called a negative CAVERS, this will impact your ability to get a loan. If you have student loans yourself, or even if you've co-signed for a student loan and it's gone into default, that will show a negative CAVERS. These are things that need to be addressed and taken care of in order for you to get a mortgage loan. At Ruoff, we will pull this at the very beginning of the loan process. And if it is a negative CAVERS, if something does show up, I'll be able to guide you to say, hey, here's a number to call. Here's who you need to talk to, so we can help you get that resolved. Again, it's very important to stay proactive, to know what's going on, and to reach out and see what your options are. There are always options. There are always things that you can do as long as you use those tools and those resources available. So now that we've talked a little bit about things that could negatively affect your credit, so if you're in that situation where you've had some things that have happened, what can you do moving forward? Okay. So again, the most important thing, guys, is pay those bills on time. And when I say that, this not only includes your debt, like your mortgage, car credit payments, but also just your regular monthly bills, utility, your cell phone. Because again, if you don't make payments on those, these companies can report those as charged off to the credit bureaus. So again, very important to make all those payments on time. And as we discussed before, keep your credit card accounts open. Do not close them even when they have that zero balance, because keeping those open, it can really have a significant effect on your score. Again, it shows your financial credit history. So even after you've long, quit using that credit card and it still had a payment, it's still showing up on your credit bureau with a negative, not negative, excuse me. It's still showing up on your credit bureau with a zero balance, but it's shown that you've got some length of credit with that. And having a credit cards are such a great tool to build your credit. And if you have had some issues in the past, you can actually apply for something called a secured credit card. So what that means is you will go into your financial institution, and let's say that it's $300. What you'll do is you'll deposit $300 into a savings account. In turn, that financial institution will give you a credit card with a $300 balance. So this is another way, if you've had some issues and you don't qualify for your normal card, this is a great option to help build your score and really get you where you need to be. All right, so now that we've kind of talked about, things that can affect, what we can do to improve, how do we maintain it? Make those bill payments in full on time, and only apply for credit and new credit when you really need it. A lot of times, when you're going to the stores, a department's really, hey, you can open up our credit card and save 10%. That's not always a good idea. That 10% may not really negate the 25% interest you may pay on it. So definitely be aware of applying for new credit. Another thing that's very important is looking at your credit report. You can get a free copy of your credit report from all three bureaus once a year. It's a good idea to look at those to make sure that everything on there is accurate, because there could be mistakes that happen. So if you see something on there that isn't accurate, you'll want to dispute that. Personally, for me, I do this at the first of the year. This is just a good reminder. Beginning of the year, I will always take a look at my credit bureau, make sure everything looks right and looks as it should. So, great habit to get into. Um, and then when we talk about rebuilding, if you do have a lower credit score, it can be rebuilt. It's going to take some time, guys. So you're not going to get this up overnight. It's going to take some time, and slowly you'll see this go up. You have to remember, you didn't get in debt overnight. It's not going to go away overnight. It's going to take some time. So it's just not a quick fix. However, using the tools that we talked about consistently is going to help you. There are some things that are going to stay in your credit report. Delinquencies stay on for 7 years, bankruptcies for 2 years, or excuse me, bankruptcies for 10 years, inquiries for 2 years. So when we pull your credit, we're going to see if there's been some past issues. However, we're really looking at what you've done to rebuild and what you've done going forward. That is the most important thing. So with that, again, if you've had some issues with credit, if you've got some things to do, there are ways, right? You just need to be proactive. It's going to take some time, but you can do it. It's not hopeless, right? So take those steps, be proactive, and know I'm always here as a resource. I'm here to help. So I hope you guys get some good information out of that. Nikki, thank you again. It's always a pleasure seeing you.
Oh, those were awesome steps. So credit repair is so important as the first step to buying a home. I know I've had some homeowners that try and then realize it wasn't quite the right time to home ownership, and we put them on a path to credit repair. And whether that was 1 month, 3 months, 6 months, a year, 2 years even, and eventually they got their home. And you just have to stick with the program, essentially.
Absolutely.
And it can be done. I promise, if you make a commitment and stick with the program, it can be done. And I am so excited, and I am always so proud of those homeowners that do it. So thank you. Thank you for that information. Thank you for those tips. Thank you for those steps. And Stacy and I can't wait to bring you guys the next episode of this unbelievable life, because Stacy and I are living that unbelievable life, and
Yes.
you can too. So we will bring you guys the next steps in the next episode. So stay tuned, and we will be back for more.